Welcome to Drill Down Earnings. We have fiscal third quarter results from Broadcom. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist, and Q3 earnings for this company is so important. We used to care about this company so much because they supply so much to Apple, but right now it's all about AI. They still, of course, supply so much to Apple. So you see a lot in these results. Beat or miss is all Wall Street sees, and they saw a beat with, well, let's look at the actual numbers that the business actually did. $13.1 billion in revenues, up 47% on a year-over-year basis, and a loss, a GAAP loss of $1.9 billion, but a non-GAAP it actually had about $6 billion in income. And a huge tax expense in this quarter that threw off the results. It was a one-time expense relating to a bunch of one-time items, not least of which their VMware acquisition. But their VMware acquisition distorts that sales growth because they acquired this giant business. So revenues in the quarter up 47% over the previous year, but up from the last quarter and the quarter before that. So this business is growing really fast. Think about Broadcom, right? You can't help but think about acquisitions if you think about the stock, because the stock ticker is AVGO from AVGO, which was a spinoff from HP back in 2005. They do an IPO, they add in the LSI Logic business that had once been part of AT&T's semiconductor empire. Then they add on Broadcom, which really kind of did a take under, if you will. And the Broadcom management and Hock Tan in particular, who runs the show ran the show at Broadcom, runs the show now at all of Broadcom. They add Brocade, they add CA, they add parts of Symantec, and then of course the giant acquisition of VMware. And it's led to some diversification. So the chip business still dominates. It's still 58% of revenues in this current quarter. But the sudden diversification that VMware gave them has given them a more stable business and a more profitable business. In the midst of all this, an operating margin rebound as well. So the operating margins took a hit with the acquisition of VMware, but are steadily improving every single quarter, up to 29% in the quarter they reported today. Very strong. And within this, chip sales are up only 5%. You would think with all the excitement about new iPhones, we may hear about that even next week from Apple, but also all the excitement that we expect to hear from all things AI. It's not really in this quarter. This quarter was good, but maybe the super excited AI crowd didn't see everything they want. So as a result, in after-hours trading, stocks sold off 7%. Not a huge sell-off though when you take into the context of a 75% rise for the last year. Compare that to the S&P 500. If I look at my screen, it's less. It's S&P 500, about 25% in the last year. So Broadcom's been a home run under the ticker AVGO. Now, the company says they expect to get for the full year $12 billion in AI revenues, a little bit better than analysts expecting across Wall Street. I don't actually have a projection for that, my own model. I will next time, but we're working on that. But it suggests that $12 billion, again, a little bit better than the rest of the street was looking for, but not fantastic. Bookings up 20%, that's good. But specifically, Hock Tan was asked about analysts trying to sort of trick him into answering questions about whether a delay in NVIDIA's Blackwell will also slow down Broadcom's development into the AI data center market. And him really pushing back on that idea, saying, hey, NVIDIA's over here, we're over there, we are separate businesses, we are not attached to them at the hip. Here's what he had to say.
I'm not really participating in it. That's NVIDIA's roadmap. And I'm really not directly in that kind of market, in that kind of product roadmap. That's NVIDIA's product roadmap in terms of Blackwell. Impressive product on the way to coming out. Now, in terms of base technology we developed, of course, it could be used, it could be applied, and we are very happy to share that with as it may be useful to enable Blackwell to be part of that, whether it's on the optical side, on the optical component side, which is what you're referring to, or even the DSP side, in terms of providing the interconnects to enable clusters of Blackwell to be built. That's as far as our engagement in that. We're happy to be part of that ecosystem, as I said, but directly, we're not in that market, as you know.
So big AI developments, but separate from NVIDIA, from Broadcom. All right, what's it all mean? What's your big drill down earnings takeaway? How should you think about these numbers? I'm gonna have a summary and one number that tells you a whole lot right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Broadcom, stock up 75% in a year. Q3 earnings are out. Were they good enough? Kinda. $13 billion in revenues, a big increase from the last year because of the acquisition of VMware. And although AI chip sales weren't great in the quarter, neither, in fact, even worse, probably was their business of selling into the handset makers, not least of which is Apple. But the drill down earnings bite, the one number that tells a whole lot, that number is 69. $69 billion. That's how much the company spent to buy VMware. And it has led to real significant diversification in the overall business for Broadcom. Thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check me out on Twitter or X at CoryTV. Leave us some comments on Instagram or TikTok at Drill Down Pod. We'd like to know what you think of this and what else you'd like to see us doing right here at Drill Down Earnings.